Should you be using a Roth IRA or a Roth 401k? Well, in today's video, I'm going to break down the differences between Roth IRAs and Roth 401ks and when you should be using them to save for retirement. I'm Matt Sorensen. Let's build wealth. I'm going to break down today's video in terms of getting money in, either a Roth IRA or Roth 401k, the tax rules between each, how do they benefit you, why are you using these Roth accounts, how can I invest those dollars, what are my options there, what are the differences between a Roth IRA and Roth 401k, there are some differences and pros and cons between the two, how do I get the money out, and what if I want to use both? All right, let's talk about getting money in. The first thing on a Roth IRA, you can do $7,000 a year into a Roth IRA, pretty cut and dry. If you're 50 or older, you get to put an extra $1,000 in. Now, the Roth 401k, on the other hand, is something where you can put way more money into this thing. Now, as we're talking about Roth 401ks, I'm going to break it down into two categories. One, you have a job where you work for a company and you have a corporate 401k versus you're self-employed and you're doing a solo 401k. Now, in either the day job 401k or the self-employed solo 401k, you can do $23,500 of employee contributions that are Roth dollars. Now, the difference between the day job 401k and for those of you who are self-employed is the self-employed person using a solo K can put another $46,500 of Roth money into a solo 401k, totaling $70,000 of Roth contributions every year into their solo 401k Roth account. One reason we love solo 401ks for any of you self-employed with no other employees, especially when you're trying to max out retirement plan contributions, you've got good income and you love Roth dollars, we can get $70,000 in that thing a year. That's 10 times more than you can do in a Roth IRA. Now, for those of you who have a day job, you're still doing a lot more than you can in a Roth IRA, right? You've got $23,500 that you're putting in as an employee, plus the company likely does a match. Let's say in the example, you make $100K a year and they do a 4% match dollar for dollar. So maybe they drop another $4,000 in of free money. That's a match. You want to grab that, of course. Now, most employer plans, 401ks, 403bs, are allowing now, this is a new law from Secure 2.0 a couple years ago, but they allow the employer match to be Roth dollars as well. So in this example here, again, this is just an example. The numbers change based on your income, but you're putting away $27,500, assuming someone making $100K a year trying to max out their Roth in the Roth 401k. Now, it is possible for someone with a 401k at a day job to get to $70,000 in Roth dollars, but you need to have a higher salary level in order to max out on the match. And again, it's going to depend on your plan. But the bottom line here is 401ks, I can get more dollars in contributions, whether this is day job 401k or my self-employed solo 401k. Roth IRAs are still good. I can get $7,000 a year in. Now, let's hit some of the tax rules here. With Roth accounts, remember, you put money in, you don't get a tax deduction. There's no tax deduction on the way in. The whole benefit of the Roth account is as you're making money, no taxes, you're earning, investing, getting gains and income into the Roth account. And when money comes out at retirement, there's no tax on the way out. And that's the same whether you're doing a Roth IRA or whether you're doing a Roth 401k. Now let's go over some of the differences between a Roth IRA and a Roth 401k. Hey, I'm cutting in here because I want to make sure you know all the stuff I'm talking about on my YouTube channel, investing in alternative assets, whether it's real estate or private funds or private equity, oil and gas, crypto, saving on taxes, all these concepts I love and I talk about here. I want to let you know we do this at my company, Directed IRA. So get on over to directedira.com/call and book an appointment with one of our self-directed IRA specialists that'll help you understand how to take control of your retirement. One unique difference on a Roth IRA is when you make regular Roth IRA contributions, $7,000 a year, you can pull those contributions out with no tax and no penalty. It's only the investment returns and gains in a Roth IRA that you cannot pull out. You have to wait until you're 59 and a half, otherwise you're assessed a penalty and taxes for pulling it out early. But the contributions always come out tax penalty free. So for example, let's say over 10 years, you put $7,000 in a year for $70,000 of contributions. And let's say after investment returns, the account's now worth $150,000. You have $80,000 of investment returns. Well, you can always pull the $70K out, the contributions, whenever you want. You're 35 years old, pull it out at 35. No tax, no penalty. The 80,000 of investment returns or gains, if you pull that out early, you will have tax and you will have penalties. So you've got to wait for the investment returns and gains to take when you're 59 and a half or older. Now, Roth 401ks don't have that rule, okay? There are tax and there are penalties for pulling the money out, even the contributions early. So just know that's a unique rule for Roth IRAs. The second thing that's different for Roth IRAs and Roth 401ks is the high income restriction on Roth IRA contributions. So under the Roth IRA rules, if you're high income and you make more than 150K a year single or 236K a year if you're married, you cannot make a standard Roth IRA contribution of $7,000 a year. Instead, you have to do what's called a backdoor Roth IRA, where you contribute $7,000 to a traditional IRA. It's a non-deductible contribution. You don't take a deduction, and then you convert those dollars over to a Roth IRA. That strategy is called the Roth IRA. Now you can click the link over here to learn how the backdoor Roth IRA. I go into the detail on how that specifically works, but just know if you're high income, you can still do a Roth IRA. You're just doing a backdoor Roth IRA. Now, as we look at the Roth 401k, there's no high income restriction on contributions, so you don't need to worry about doing anything backdoor on the Roth 401k side. Now, there's something called the mega backdoor Roth. That's another strategy and a way to max out the 70K doing after-tax contributions. Another day, another video, but for purposes today, just know Roth 401ks, you can be making $1 million, $10 million a year. You can still be doing 70K a year into the Roth 401k. Now, as you're investing the account, remember the investment gains, you pay no tax on it, and it's coming out tax-free later when you hit retirement. But in a Roth IRA, you can do something called a self-directed Roth IRA. And in a self-directed Roth IRA, you can invest in real estate, private companies, private funds, precious metals, crypto. All these assets are available if you're doing a self-directed IRA. Now, you can be at a brokerage IRA, buying stocks, bonds, and mutual funds. But what our company does is we let clients own private assets in their IRA rather than just giving you a menu of stocks, bonds, and mutual funds. In Roth 401ks, you can also self-direct a solo Roth 401k. We do that all the time. We have thousands of clients that have solo Roth 401k accounts. They're self-employed and they're doing Roth dollars and investing it into real estate or private companies or startups or private equity funds, okay? Those are all assets, again, you can do with a Roth 401k account. Now, you can still do brokerage accounts and ETFs and mutual funds, of course. Now, the corporate 401k, just this past week, President Trump announced an executive order saying your 401k can invest into quote unquote alternative assets, which is real estate, private equity, private funds. These are all assets, even digital currency like crypto, that you can invest in with your corporate 401k. Now, that's going to take years and some time for corporate 401ks to get around that, but that was just recently announced, and I'm going to have videos and other content on that, so stay tuned. Now, you can learn a lot more about self-directing right here on my channel, and also get over to my team at directedira.com. You can book a call with them to talk about how you can use a self-directed IRA to take control of your retirement and invest in private assets. All right, now the last thing I want to hit here is, can I do both? Can I do a Roth solo 401k and a Roth IRA? The short answer to that is yes. Now, one little caveat here is when you're doing a Roth 401k and you're participating in an employer plan, you're typically going to need to then do a backdoor Roth IRA on the Roth IRA side. Now, if you're high income and doing a Roth 401k that you're maxing out and you're getting your 70K in there, if you're doing a solo Roth 401k, or maybe you're getting in 23, 27, 30K into your corporate day job Roth 401k account, and you're like, I want to do a Roth IRA on top of this, you can do that, but you're likely high income, so you're phasing out from just doing the regular $7,000 standard Roth IRA contribution. So again, in that instance, we'll do the backdoor Roth IRA, where you're putting the $7,000 in to the traditional IRA, non-deductible contribution. That's what's reported on your tax return. We have resources on how you do that. And then you convert it over to Roth on day 2. That is the backdoor Roth IRA in essence. I think it's an incredible strategy to be doing both, because Roth money is the most sacred, tax-efficient money out there. It is the only legal way to make money in the US and not pay tax on the profits and gains, where you get to keep it all. I'm not talking about some strategy, some charitable trust strategy or something like that, where you don't actually get the money at the end of the day. No, the Roth account is going to you in retirement, all those gains entirely tax-free. So we want to maximize the dollars we can get into those, because that's going to determine how much we can invest and grow and all the tax-free gains we're going to get on the way out. Now, for more tips on how to grow and build wealth, save taxes, and protect your assets, please subscribe to my channel. I'm Matt Sorensen. We'll see you next time.